Andreas is the MD at Active Fund Placement in Germany. Welcome. And perhaps you could just very quickly introduce your business, please.
Yeah, thank you, Nigel. Yeah, Active Fund Placement, we are a regulated entity, which was one of the issues you just mentioned, in Germany, doing business since 2009. We have a broad approach, so we have a team of 5 people in sales, doing institutional sales as well as wholesale. I can go into more depth in a minute. So we cover everything except maybe retail.
Okay,
in the market.
got it.
And that's, Germany is the most important market. In addition, there's Austria, which is a lot smaller than the German market in total. And we do a bit in Luxembourg and Liechtenstein, which have ties to either of the 2 markets.
Okay, great. Thank you for that. And if you look at the institutional market, in particular in Germany, because there are so many different types of institutions, which ones are most dominant and which ones do you specifically focus on?
That's not so easy to answer because, as you said, there are quite some different players in the institutional space. I think that what you have to keep in mind, the institutional space in Germany is quite regulated. So it's for sure the area with the highest hurdle to enter. You have to be ready to provide all the necessary data in order for people to even consider you as a potential manager. And we work with consultants. We also work in direct relations with endowments, with pension funds. That is the focus.
Okay. And since we spoke about a year back, because obviously you joined our webinar, literally 11 months ago, have there been any major changes in the German market?
For the institutional business or in general?
Institutional.
It's a bit, I don't want to say business as usual, but it's still, when you look on what you see in the market today, it's a lot of global bonds, global equities. So it's trying to delegate as much decision as possible for some of those players. I think that reflects a bit the volatility in the markets. That's, if you want to see a trend, that's a trend. A second trend, of course, impact investing, no big surprise. Plays a more important role. A year ago, that was not really existent even in the institutional segment as a requirement. That has changed significantly. And then theme funds or themes in general play a more important role as they used to. Before it was more regionally allocated or global allocated, but nowadays we see specific requests for theme management.
Okay. And what about the strategies which seem to be most popular with institutions in Germany? For example, which RFPs are you receiving? Is it in PE? Is it hedge funds? I know it's going to be very broad, but is there a common theme developing?
I would say you have to see, first of all, the German market is maybe different than UK or others, as equity plays a much smaller role on the institutional segment. So of course, then you have fixed income. Fixed income market is very difficult, as we all know. So the alternative space became more dominant than it was already. Liquid alternatives. We see requests for convertible bond mandates, and we see things like short duration, inflation-linked solutions. So it's pretty much a bit of a flight to quality at the moment.
Okay. And just my final question, if you're, let's say, small to mid-sized investment company looking to raise assets from Germany, what would you say are the do's and don'ts?
Maybe be prepared to that it takes a bit of time. It's quite a competitive market. So you have to establish yourself, you have to make yourself known in the community. You have to offer something that is really unique, so a real value add. A Me Too product I would not suggest to enter at this stage. And then you have to make sure which segments you want to go, institutional, wholesale, And there are different requirements then for the different segments in terms of reporting or in terms of structuring the share classes. So make sure that you have the right value proposition for the right target markets.
Great. Okay. What about a mixed asset approach, blending the two asset classes in one fund? And would liquid alternatives include a L/S mixed asset strategy?
Mixed asset strategies work better in the wholesale segment than in the institutional segment, because on the institutional side, usually the asset allocation would still be decided at the asset owner level, while at the wholesale segment, often people want to have a one size fits all solution, or maybe they have a portfolio of 4 or 5 managers that do this mixed approach. And the second part of the question, LS and long short, I assume we talk about long short, is of course of high interest. We had in the past long short credit in the market, very successful. Long short equity is established also. It's the whole liquid alternative part is getting more prominent, more important, of course. And then you have to understand the mentality of the average investor is maybe also more conservative. So when we talk about long short, it's more like the drawdown is actually what people are looking at.
In Germany, if a new entrant wishes to focus only on the institutional target market, i.e. family offices, etc., are not all on the wholesale retail market, is it necessary to obtain full distribution permissions, or does targeted private placement work?
I'm not 100% sure if I understand the question correctly. What you should do is register the fund for public distribution according to MiFID. So if it's an EU-based asset manager, it's a very easy process. So passport it to the German market, and then you can have a share class that has a high enough minimum investment, so you avoid any additional administrative burden.
With the turmoil in the markets, they sense some TPMs are probably more in demand. What sort of capacity constraints might a TPM have when it comes to taking on even more managers?
There's not much to add, really. When I listened to Core, it would have been the same, I would say. I think this non-competitive approach is the right way to go in terms of your partners. And then, yes, you have to be able to deliver. So that limits the number of partners you can onboard, depending on the size of the team you have, of course.
So TPM's going to share the management fees. What is the success fee? And is that the same as a performance fee? A hedge fund would charge a management fee of 2% and performance fee. Do TPMs share in both?
Different cases. I think it depends a bit on the setup of the manager. And usually if you manage to participate in the performance fee as well, you get a lower share of the management fee. That's at least our experience. So it's a bit of a trade-off of plannable income and more risky income. And when we go into more risk, of course, it should be a higher total amount on average.
Well, thank you very much for your time. Let's move on to our other key partners in the project. Jeremy, he is the Managing Director and Head of Continental Europe, UK and Ireland at RBC Investor and Treasury Services. So welcome, Jeremy.
Thank you, Nigel.
Presumably you're in Luxembourg at the moment?
Yeah, just back from London. Yeah, I'm based in Luxembourg, so RBC, we are an asset servicer. We have offices in Luxembourg, Ireland, UK, France, Switzerland, but also Malaysia. So we support our clients when it comes to distribution in this country. So we don't do active distribution, but I would qualify ourselves as a distribution enabler, helping asset manager to bring on investor into the fund.
Sure, and I believe you tend to focus on investment managers, and there are many watching this who look after maybe 200 million up to 550 billion. Would that be correct?
Yeah, so we target mid-size asset manager where we can differentiate by the level of service we can offer. We are very strong shareholder services transfer agent in Luxembourg. So we've like, just to give you some example, we are connected to 10,000 distributors, 5,000 LPs. We process 47 million transaction, subscription redemption or capital call over the past 12 months. And we have investors that are coming from 110 countries. So that's why, I use the word distribution enabler.
Okay, got it. And what sort of services do you offer, let's say, investment managers and TPMs?
So like mainly if we stick to the distribution side, our role is to do the shareholder services component of it, opening a account, transaction processing, and then make it seamless. So having access to all these distributors and all these LPs help our client base connecting with new investor. We do also fund administration and custody, but less relevant for the conversation we're having today.
Okay, great. And obviously you operate in two major IFCs in Europe, Dublin and Luxembourg. So what are your thoughts on Luxembourg versus Dublin? It's only fair I ask you that.
So, first of all, I'm selling Dublin and Luxembourg. So, like, I don't think we should oppose the two jurisdictions. I think that I wouldn't repeat what Stuart said, but I think that's very true. In the two jurisdictions, you have, the right toolbox for some products. So sometimes, and we've seen that with Luxembourg. Luxembourg has been, for example, the big winner of the private asset. So with the right fund structure, and this has really blossomed and boomed. But UCITS brand, for example, recognized as well in Ireland as in Luxembourg. So like you would see Irish UCITS and Irish Luxembourg fund being distributed everywhere in the world. I would just say that it's a question sometimes of culture. It's a question of having the right legal structure, depending on the product you want to sell and where you want to distribute. I still feel that, like being two offshore jurisdiction recognized everywhere, again, it will really depend on the strategy and what type of product you would like to build. So that's mainly the decision factor for doing something in Ireland or Luxembourg.
I'm pleased to say more questions coming through, which I'll come to in a minute. But final question for you, Jeremy. What do you consider to be the main distribution trends in continental Europe?
So what we see is, like private asset is growing, that's for sure. So this is becoming bigger and bigger. I think that what we see is now retailization of the distribution of these private asset funds. So definitively that's a trend, like having more of the retail as per the MiFID II classification of investor investing into a private asset fund where they had no access in the past. So I think that this is really booming, starting this day and will be booming over the next 3 years.
Great. Well, I really appreciate your insights and patience. Thank you. Stuart is founder and group CEO of GemCaps. So welcome, Stuart. Let's quickly talk about GemCap. It's obviously a ManCo. For those of you who are watching who don't necessarily know what a ManCo is, could you just describe what the benefits of a ManCo are to, let's say, an investment management company?
Well, just very quickly on that note, we're a fund platform as well as a ManCo. So you have to have the two together. So we have a funds platform, which where all the funds sit. And then you have the management company, which does the oversight and helps manage those assets. In short, and in essence, what a ManCo is actually, we make life easy for investment managers. That's ultimately what we have to do to ensure that the whole infrastructure runs smoothly, in particular from a regulatory and an oversight point of view. And if you think about where this came from, when we first set up, back in 2011, we were a self-managed investment company. So we were just a platform. And the regulator had made it pretty clear to a lot of platforms that they weren't happy with what had come out of the financial crisis. There's a lot of issues around the management of the funds by certain managers. And so they were asking for enhanced oversight of those platforms and the underlying funds. And so management companies started to come to the fore, to the point now that they dominate the market, and there's very few just self-managed investment corporations left in the marketplace. And what Manco does, it provides oversight of various parties, such as the oversight of the investment manager, fund distribution, the administrator, financial aspects, as well as making sure that we give confidence to the investment manager and obviously to the regulator that we know that what's happening is being done properly. And it helps also the investment manager to negotiate some of the complex regulatory regimes that are underway and make sure they're done properly. And ultimately, I guess the part of this is that we provide substance, which is necessary to help raise the capital that they're looking for across Europe and also globally. So it allows the fund manager to focus on what they do best.
And obviously your business is clearly based in Dublin, regulated there as well. So what's the appeal of, let's say, the Republic of Ireland? You know I'm going to ask this, over other jurisdictions like, let's say, Luxembourg.
I'm not going to have a go at Luxembourg, because I know Jeremy at RBC they've got a very strong Luxembourg business there. I've been involved in the Irish funds business now for probably 20 odd years. I've sat a number of boards over there, and I found that the Irish funds business, they do have a very sort of can-do attitude. Even the regulator, which is it's very rare to say these days, is actually proactive as far as ensuring the funds industry grows. It's a globally recognised area. Irish funds are sold literally in every jurisdiction across the planet. It's English speaking. It's a common law, certainly from a UK perspective. We recognise that, which is certainly different from Luxembourg, which is obviously a more of a mainstream European law jurisdiction. And it has a very strong financial services industry, and there's also a lot of companies there from multinational technology companies. So they're establishing themselves in Dublin, which means that, and it's something we can probably take to another seminar, another webinar, the whole investment in the workings of the funds industry takes technology, and the growth of fintech is massive in Dublin. So we're benefiting from that. So the point that we're trying to get this straight through processing, and the digitalization of our business is benefiting from this development in Dublin.
Okay, thank you. And from a Manco perspective, what's the benefit of working with a TPM?
Well, if I may, I'd like to talk about the benefits of the investment manager as well as the TPM, if that's okay. Let me deal with the investment manager, which I guess goes back to the role of the Manco. Every fund manager based in UK, Asia, US is trying to come into the European space. They want to grow their business without having to commit significant capital. And I mean capital in both financial, but also in human costs. So I think it's in order for them to run their business. And we work now with some managers who historically had their own businesses over here in Dublin. And they've just gone, this is costing us too much time and money. So that means that they can give up a lot of that and hand that over to businesses like ourselves. There's less regulatory and compliance commitments, less risk and lower costs generally. I mean, one of our managers, we saved them €1 million on the day that they moved their assets to us, just in legal fees. So there are some massive benefits. And it allows the fund manager to focus very much on their core competencies. Administration is not an added value for a fund manager. Fund managers should stick to what they do best, which is run money. And having a Manco allows them to just focus on that, and actually having the benefits of then linking a Manco like GemCap to the third parties. And I'm glad to say that we work with all the third-party marketers on the call today, and we've got great working relationships with them, as well as a number of other managers, a number of other TPMs. And the beauty about the TPM market is that they're specialists. They know their market very well. I often say they don't know it, they shouldn't be in the game. It's like a sales guy doesn't know how to sell. These guys really know their business. It's a known cost base, so you know what you're working with. You're not driven by having to grow the business and suddenly have all lots of infrastructure around the distribution. It's there. It's a plug and play model which works really, really well. And it gives you access to quite sophisticated capital markets, which otherwise you may not know. If you're sitting in New York, how do you know what's going on in Milan or Frankfurt? It's impossible. So it's really, really important for you to engage with the TPMs so you get access to those markets, which may be less familiar to you otherwise.
Sure, no, good point. And obviously you're working with lots of different TPMs and investment management companies. So what aspects of cross-border distribution should investment managers, for example, be made aware of?
Well, I think this is going to be picked up by everybody here on the call today because it's relevant to everybody. Obviously, every market is different. I mean, we always smile with our US managers who look at Europe and think it's one country. We go, hang on, no, there's one less than there was 5 years ago, but it's still a significant market, and everyone has a different requirement. You got to register different markets, and we advise managers not to register in every market. Focus on Spain, focus on Germany, focus on the Nordics, wherever it may be, but have a focus. But that means in some cases you can't do cross-border. You've got to be very careful who you work with to make sure you can do cross-border. So if you're a UK manager, you've got to make sure you've got a regulated business over in Europe who can help sell you that product. That's really important. The other thing to bear in mind is translations. Now, I think my colleagues here on the call will know better about this, but we've got like 150 different kids, and about a third of those got different translations on them. So there's a lot of costs associated with it. So just make sure you've got to bear those in mind. And then the UK MiFID, from a UK point of view, MiFID, you can't fly in and fly out anymore. So just be aware of that. Don't think you just nip across and go and visit Paris and happen to bump into half a dozen managers, wealth managers. You're not allowed to do it anymore.
Great, thank you. Just